Hey traders, hope you're all enjoying your weekend. I got lots of messages from traders to upload a strategy with full objective rules with the exact rules of setting up stops and targets. After my last weekend's video where I've shown you how to do scalping on 5 minutes time frame on commodity and forex, this weekend I want to give you the objective rules how to do scalping with the exact rules and with the objective rules and with the exact rules of setting up your stops and targets. So if you are a scalper and quickly wants to enter and exit the trade as efficient as possible, then this video is for you. So hang in there, I'll see you right after the intro. Right traders, if you follow me from a couple of months or a year, then you know I have 4 factors which I always advise you guys to follow if you want to become a profitable or successful trader. And these are the factors which I'm going to implement in this scalping strategy. So factor number 1, observation. We observe the market and we observe how the market is trending upwards or downward. Then we have condition. Once we observe the market, we look for the entry conditions. Once we have a conditions, we set up our stops and targets and then we take our entries. So let's quickly jump on to the strategy where we have the objective rules of entering the trade with the exact amount of stops and targets. So the factor number 1, observations. I want you guys to look at the chart and tell me, what does it look like? Does it look like a nice uptrend? Of course it does, right? That is what we observe. And to identify the trend, what we need to do, we just need to plot the indicator which is 50 EMA. So this is the main indicator I'm going to use throughout the strategy, and this is the exact indicator which will keep us with the trend of the market. Now I'm going to put one more indicator which is 20 EMA. The main indicator we need to look at is 50 EMA. 20 EMA is an indicator which is our extra confluence. So we have these indicators on the charts and we need to see if the market is trending upwards or downwards. So we have done our observation by looking at the market trend. Now the second factor is conditions. Now the conditions are, if the market is trending upwards, we are only going to look for buying trades. Now after the trend is confirmed, we need to look for our entries. Now other main factor we need to see is the spread. And we're going to only pick those pairs that has the tightest spread. Now it totally depends on your broker, if your broker offers a very good spread or not. I personally use IC Market for forex trading as they offer really good spread. Sometimes spread is as low as 1 pip for Euro USD, GBP USD and some other pairs. So we only need to take trades on the pairs that has the lowest amount of spread so that we can get a better reward to risk ratio. So now as the trend is confirmed, the price is trending nicely towards the upside, a nice uptrend, and if you see, the price is making new higher highs. So every time the market breaks above the previous high, it confirms that all the buyers, all the technical traders, they combinedly thinks that the price of that particular asset must be higher. As long as price is breaking above previous highs, the buyers are coming in and pushing the market up unless and until the price breaks below the previous low. In that case, we have the change of trend. So now the price is making new higher highs. It's nicely trending up. It's nicely trading above 50 EMA. Now if the price is trading above 20 EMA as well, that is your extra confluence of a nice uptrend. The main factor we need to see is market must be trading above 50 EMA. In this case, what do we have? As you can see, we observe the market, that is checked. We look for the condition. Now I want you guys to see in this area if you see any bullish engulfing candle right here. So we do have a bullish engulfing candle, means we have a valid condition. So we are entering right after the pullback. So bullish engulfer must happens after a pullback. Price is trading above 50 EMA. Then we had a pullback followed by a bullish engulfing pattern. So these are the conditions and rules you need to stick in front of you to take your trades. Now, as you can see, every time the market push up, breaks above the previous high, it creates the support level as well. So as you can see, market breaks above the previous high and now what do we have? A bullish engulfing pattern. So once you see the pattern, what is the factor number 3? The factor number 3 is set up your stops and target. Now, the way you set up the stops and target, take your long tool right at the close of this candle, something like this. And from the wick of the entry candle, you add 1 ATR. So ATR of this candle is 3 right here in the top left corner. So 3 plus 3 is 6 pips like this. And we go 1.4 to 1 risk to reward ratio, something like this. So like this, we have a better reward than risk. Once you take profit 1 is it, you can always manage your trade. So initial target, you can go 1.4 to 1 risk to reward ratio, something like this. So as you can see, it did take a while and then price hit our take profit. Now at this point, when the price is ranging, all we want to see another break above this previous high. Once we have a break above the previous high, we have a confirmation that buyers wants to keep on pushing the market towards the upside. Now, right here, price has broken above this high and now starts to push up right here. At this point, we are just observing the market. Now, what is the second factor? We look for the condition. And what is the condition? The condition is the bullish engulfing candle. Right here, what do you see? A bullish engulfing candle. Now, these are just the basic rules for you so that you can go out, test the strategy, and if you have your own strategy, implement that in the strategy and test it. If that strategy come out as a profitable strategy in a large sample size, then add that in your portfolio. But I personally have 6 rules for a valid trade, which I can't explain in a single video. But if you are my full MMTA course students, you know all the 6 rules. That is something you will learn in my full trading course. But now at this point, we have the condition of a bullish engulfing pattern, which is the basic rule. You need to see a bullish pressure. Once you have that, what is the third factor? We set up the targets. And the target is 1.4 to 1, the initial targets, something like this. So from the wick of the entry candle, which is 5, we add 5, which is the ATR. And we go 1.4 to 1 risk to reward ratio, something like this. And if you would have managed it, it can go up to 1.7 to 1 risk to reward ratio. That is another take profit hit right here. So that is the bullish example of this pullback strategy. If you want to do scalping with that, that is the exact rules you need to follow. And that is how you set up the stops and targets. Now let's move forward and see what do you see right here. A nice uptrend, right? So we observed the market. We did not guess in the market. Now the observation is done. What is the second factor? We look for the conditions. Now within this area, do you see any bullish engulfing candle? I hope you said right here. So we have a condition. Now, after the conditions are met, we set up the targets. And the target is 1.4 to 1 risk to reward ratio. That is our initial targets. Right here from the wick, we go 5 pips. We add 5, which is the ATR. So 7 plus 5, which is 12 pips below. Then we go 1.4 to 1 risk to reward ratio. And if you would have managed it, that hit your targets, which is 33 pips, which is 2 to 1. And as you can see, we had a target easily hit. So that is how you look for the third factor, which is your targets. And then the fourth factor is our entry right at the close of this candle. So that is how you can make money in the market just with some objective rules. These are your objective rules you need to stick with. Once you have your rules there, then trust me guys, not really hard to make money in the financial market. And we do have another nice trade right here. Price easily hit your take profit. Now let me show you some bearish examples and then we're going to wrap this lesson. Now if I ask you, what trend does it look like? Does it look like a nice downtrend? Yes, it does, because the price is now nicely trading above 50 and 20 EMA both. But again, the main thing we need to see, price must be trading below 50 EMA, and then we can look for our entries. If trading below 20 EMA as well, then that is an extra confluence. Now we have done our observation of looking at the trend, that is downtrend. Now the second factor is look for the condition. Do you see any sort of conditions here? Of course we do. We have a nice entry condition right here. Now I know you must be wondering that this is also an entry condition, but like I said in the start of the video, I have 6 rules and this pattern invalidates one of my rules. But we do have a nice entry condition right here, a bearish engulfer. So we do have a condition. And then what is the third factor? We set up the targets. Now if you remember, the target is 1.4 to 1, the initial targets, and then we manage it. So right at the close of this candle, from the wick of this candle is 6, we add 9. 15 pips above. Let's do 16 because it's 9.5. And then we do 1.421 risk to reward ratio right here. So what do we have? Our target has been hit. We entered our trade with the objective rules. So a nice take profit hit just by following some objective rules. So now do you spot one more entry here? We had a nice bearish engulfing pattern right here. So what do? We enter our trade at the close of this candle and the target will be 5 plus 3, which is 8 pips. Let's do 8.5 and we go 1.421 risk to reward ratio, something like this, and took a while to hit our take profit, but eventually that hit our take profit. That is how you can do scalping. And let me show you a quick result right here. And as you can see, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 trade, and out of 19 trades, we only had 1, 2, and 3 losing trade just happened in one whole week. So that is how you can make money in the financial market if you have your objective rules there. You don't need to guess in the market. Guessing can do nothing but just destroy your trading account. But if you have the rules, then trust me guys, you have that edge over the market and you can easily make money in the financial market. But again, you need to make sure if your broker is offering very good and tight spread. I've made a video on scalping where I did a scalping on net gas and gold. If you want to check that out, I'm going to put the link right in the description if you wish to see that as well. So I hope you got a value out of this. Before I end this video, I want to give you a little suggestion. Do not just try and start trading this strategy in the live market. Make sure you backtest this strategy first and then optimize the best performing pairs. Once you have a best performing pair where you tested with at least 100 times, then add that pair in your portfolio and then maybe start trading live. So backtesting is very important to gain that confidence in the live market, because when you're trading live, then the psychology plays a very important role. So you need to master your trading psychology, risk management, and everything needs to be in place before you start trading in the live market. So hope you got a value out of this video. If yes, hit a like button for me. If you're new, subscribe button and join Money Markers Trading Academy. Hope you trade green. See you guys in the next video. Till then, take care.